What's up guys, Josh Olfert here back with another video, and today we're talking about elections. It's election time. What does that mean for investing? What's going to happen in the markets? Stick around to find out. Time to think like an investor. So guys, it's finally here, that day that everybody's been talking about, everybody's been waiting for. It is the United States presidential election, and boy oh boy are people going crazy. As you can see behind me, my windows aren't even boarded up. You know, that's because we're several stories off the ground. But there's people out there boarding up their stores in advance because they think this might cause riots. There's crazy things going on. This is one of the most polarizing elections we've ever seen, and certainly one of the most polarizing in our entire lifetime. So what does this mean for investing, and what does this mean for our portfolios? Are there changes we should be making, things we should be doing differently? Well, first things first, there's a funny story here, and I actually won an election once. I know quite a bit about winning elections. And I actually, believe it or not, was the president of my high school. And that may or may not be because I was the only one who ran. But guess what? When you apply for jobs, they don't know that no one else ran. They just see that you were the student body president, so it works out perfectly fine. So a lot of people are wondering, I get the question all the time, it's like, should I go to cash? Should I move my portfolio into something else? Should we be playing this safe? Like, who knows? It could be volatile. The market could be bouncing around like crazy. How are we supposed to predict these things? Well, let's first look at what happened in the last election for a second, if we could. You know, it was the Cheeto guy versus Crooked Hillary. And everybody thought that Hillary Clinton was going to win. That was just kind of the unanimous view. I remember sitting with my friends around the TV and we were watching the election, and personally, you know what, I'm not too involved in politics. I stay up to date because just to know what's going on with markets and policies and things like that. But it's not like I really care an insane amount. My friends do though, and we were watching the election, and it was crazy to see that Donald Trump was kind of running away with a thing. There was a moment in time when people started to realize, it started to click, oh my goodness, Donald Trump is going to win this thing. And at that point in time exactly, all the way radical left liberals started crying in their Manhattan apartments, and all of the crazy people in their trailer parks started shooting their guns and celebrating. It was one of the most insane election wins we had ever seen. So you might think that when we have a surprise this big, what does that do to the market? When someone who's never been in politics before and was just, a New York business guy with a reality TV show, now he's running the whole country, you might think that would have a massive downside effect, implications for the stock market. And oddly enough, it didn't. Over the next month, the market went up 4%, which is pretty solid. And over the next year, the market went up over 20%, right? So the thing to think about here, the thing to really understand from my perspective, is that first things first, it is extremely difficult to predict the future. Now, we all know that, but even in instances where everybody thinks it should go one way, it can go the other way. Now, a lot of people who even predicted that Trump might win the election might have thought, okay, well, the market will go down, so I know Trump's gonna win, I'll take my money out of my investments and the market will go down. Well, what happens? The market goes straight up. So even if you can predict what happens in the world in the future, you might not be able to predict how the market reacts to what actually happens. You might think that it will go up if X, Y, and Z happen, but it might really not. And even the most professional or prestigious traders in the world, like hedge fund managers, for example, they openly admit that they're wrong 60 to 70% of the time. They might only be right 30% of the time or 40% of the time when they're trying to predict something in the market. So even for them, the professionals, the people we hear about in the magazines and on Forbes.com, these people set up strategies with what's called an asymmetry, where they make way more money when they win than when they lose. And that allows them to be right a very small percentage of the time and still end up with a profitable trading strategy. But all of this aside, last year's election aside, you gotta be wondering a few things. This election, this one here, it's a lot more polarizing, right? Doesn't that mean, the market could crash because there's so much uncertainty? You might be wondering, which party do we want to win? Is there a party that tends to do better for the stock market or worse? And lastly, what should I even do? So now I find it really funny. I do. And it's, no fault of your own, no fault of your thinking, but it's interesting to me that people think a market crash could stem from somebody getting elected. And the reason is because of this. You, sitting in your chair, wherever you are, with your biases and your beliefs about what political party is best, thinks that if the other party gets into power, the market's going to drop. It's going to crash because the party that should be in power isn't in power. But the interesting thing is that if you look at the popular vote in the last election, what was it? It was probably pretty darn close to 50%. At the end of the day, it was almost 50% Hillary, 50% Trump. And what that means is you're sitting there in your reference frame where you sit with your beliefs, thinking that your political party will make the market go higher. Whereas 50% of the population, the other half of all the people, think the exact opposite, right? So think about that for a second. Depending on what belief you hold, you're going to think the market will do well under a different candidate or a different president, a different party, right? So if 50% of the people think that their candidate will be better for the market, and 50% of people think their candidate will be better for the market, that means that the expectations are priced into the market. The stock market is just made up of investors like you and I with our own political beliefs or whatever it might be. And so if we're battling against each other and we both think our guy or our girl should be the president of the United States, it's not going to end up mattering because we're battling against a 50% of people who actually take the counterpoint to us. Now, next question. Is there a specific party that actually does better for the market? And it's funny because it is well documented. It is true that in the United States, markets do better under a Democratic government. And that's really interesting, right? Like at first, a lot of people would go, oh, that's weird, because we think of Republicans as all, deregulate, make as much money as possible, economic growth, all these sorts of things. That's all that they care about. Whereas the Democrats are more focused on social policies and, helping people and providing a social safety net. How does it make sense that, Democrats would have the best market performance as opposed to Republicans? Now, in a study called Political Cycles in Stock Market Returns, don't get too bored, it talks about why this is. Why is it that Democrats tend to have a better record in terms of the stock market? When a Democratic president's in place, the market tends to outperform Republicans. And the reason is, it's not because of what the Democrats do, but it's because of when they're elected. It is the case that after big recessions, after big crises, let's take a pandemic or a 2008 recession, where a ton of people are down on their luck, it tends to be the case that people elect a Democratic government because more people need that social safety net and want more, liberal policies at those times. So just as we go into this market crash or some sort of recession or crisis, people elect a Democrat. And as we come out of that, as we rise out of the crisis, what tends to happen is the economy starts chugging along, the markets do well, and it just tends to be that, over time, not because of their policies, but because of the preconditions for them being elected, is what actually made the market move forward. So statistically speaking, if we get a Democratic win, it should be a good thing for the markets. As we know, it's not so straightforward. We can use statistics to find out what might be the best course of action, but there's always going to be anomalies. No prediction is ever 100%. And this year in particular, there's been some things leading up to the election that might skew it a little bit. For instance, the fact that we just came out of this massive round of government stimulus, quantitative easing. There's all sorts of things that are happening in this election that could affect the market that hasn't happened in prior ones. So what is it that you should do? And I think one of the most common things people say to me is, should I go to cash? Should we take all the money we have invested and, put it on the sidelines for now? And I want to just go through a thought experiment quickly. Do it with me, please. Imagine you go and you move all of your investments to cash. There's three things that happen, okay? First thing that happens is the market goes up. The second thing that happens is the market is just flat. And the third thing that happens is the market goes down. So let's walk through each of those, right? So if the market goes up, what do you do then? You got out of your investments into cash, and now the market has gone higher. So now you're left with the only option of buying in higher or waiting for it to fall again. And what happened the first time we did that? Well, we waited for it to fall and it went up. And you can do what a ton of people did through the 2010s and get so nervous another crash was coming that they stayed on the sidelines while the markets just roared forward. The second thing is the markets could go completely sideways. And then what? Now you've moved out of your investments, you forwent any dividends if you're sitting on the sidelines too long, you've paid commissions, you've probably paid taxes, all these sorts of things, and the market has just gone flat when you could have stayed in it in the first place. Now, the third thing that happens is the market crashes, just like you predicted, and all of your beliefs are proven true, and I saw this coming, and you just know it because you went to cash, and you're gonna go tell all your buddies, and you're gonna tell your financial advisor, oh yeah, I went to cash, it was actually quite profitable for me. No, it's such a ridiculous idea because people think that when the market crashes, they will somehow muster up the guts to buy when it's lower. And here's the thing, is that when the market is down 20% and every day it's going down another percent and eventually gets to negative 30%, what happens in people's minds, what happens to an investor is that's when they think it's all gonna go to zero. It's over. This is gonna be some massive crash that never comes back and I won't get my money back. So regardless what situation you're in, if the market goes up, if the market goes sideways, or if the market crashes, getting so defensive as to, move your money into cash is just a silly strategy because in each of the three different places, it costs you money in fees, it costs you money in taxes, and you're probably not gonna end up any better off. Now, I understand completely, when there's riots in the streets and there's a polarizing election, it can be a very emotional thing. It's almost like a human tendency. We want to pick a side or we want to be, radically in the middle, whatever it might be. We have some sort of feeling towards the way we would like the election to go. And what this shows to me, if someone feels like an event, a singular election event or whatever it might be, can derail their investments, that just tells me that they do not have a robust plan. And I think if you're becoming emotional to the point of wanting to make some serious change, it means one of two things. It means you probably don't have a plan in the first place, or your plan isn't robust enough to weather the storms that are gonna come at you through the course of your investing career. So anyways, guys, that's a little bit of my input on this year's election. I hope it helps. I hope it provides some insight into your strategy and how you run your finances. And if you guys enjoy these videos, we've seen some growth in the channel. I'm super excited to have you guys along. Hit subscribe, hit that like button, turn on post notifications, and you'll get more videos just like this one every single week. Until next time.